Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Wednesday. It's May 5th. It's the first trading week of May. And no, I don't know where the year has gone, so don't ask me. Let's talk about global economy. Yesterday, we've had international trade in goods and services. The numbers were weak. Manufacturing was fairly weak. It wasn't that strong. So far, the news is mixed. Today, we have petroleum status report. I'm neutral on petroleum right now because petroleum still, energy market, traditional energy market, never traded above last February, March highs, the breakdowns. Let me show you real quick while we're here so you could see what I'm talking about. And this is the major beef that I have with energy prices. See this green line? This is the point of the breakdown that occurred during when we first learned of COVID. We still have not traded above that level. So as far as I'm concerned, the energy sector is the only sector that's still in a recovery mode. And based on the supply and demand coming from OPEC, I think we're going to have a lot of surplus of energy left. It just doesn't look that great, especially with all of this EV traction coming around. So that's one of the reports that we're going to have today. The biggest reports is going to be the employment report and the jobless reports. That's coming out tomorrow, and the Friday's the unemployment situation or employment situation. I'm hoping that the number tomorrow is below 600,000. If it's below 600,000, we're cooking with gas. Let's talk about the NASDAQ real quick. Notice it's cooling its heels. It's hitting the 50-day moving average. It hasn't broken its support level yet, but if it breaks down, it will. And one of the reasons why you're seeing these sideways congestion, not a lot of movement, not a lot of momentum, is because of momentum levels. I showed you this several times, but I'll do it again just to show you what I'm talking about. Let's look at the NASDAQ indices here. So you could see here 84% of stocks in the NASDAQ 100 are trading above the 200-day moving average. Now, if you look at it on a long-term basis, you will see that we're coming down. The level is cooling off. We already peaked out here. It's coming off. And the S&P, oh, forget about it. Let me show you momentum levels in the S&P. Now, this is like the highest levels we've seen. Oops, wrong button. Let me show you the indices here. Still early in the morning. It's only 8:07 here. Look at this. 93% of stocks are trading above the 200-day moving average. And look at that number. That is a 15 or a 20-year high. This is the highest level it goes, and this is max. I'm going back 20 years, 15, 20 years, the highest level. So you got to be very, very, very careful in light of that. Now, the S&P is still moving higher. It hasn't cooled off just yet. But if the QQQ continues breaking down and hits the 50-day moving average, there's a really good chance, and we're very, very close, as you can see here. We bounced off, but we got close yesterday. There's a good chance we're going to hit the twilight zone levels again. And that's going to happen, and that's going to continue happening because the market is so stretched out, it needs to come back before stretching out again. It has very little elasticity, very, very little elasticity. Now, the bond market, if you look at the bond market, you see it's breaking above the 50-day moving average. I predicted that we were going to stay within a range bound. I don't think we're going to go too much higher, especially based on the comments we heard from the Fed. But I think we're going to kind of sit around this target area between the 140 and the 135-ish on the long bond, and we're going to just hover here for the next maybe another month. And then we're going to start cooling off again. Now, let's talk about global economy. In China, Japan closed for holidays. Declines for tech stocks, which is why the QQQ is lower, as you could see here, including Apple and Microsoft. Just these two stocks alone probably have about 30% of the market capitalization in the NASDAQ 100. Technology-heavy stocks dropped 1.9%, almost 2%, as you could see here, reflecting in the NASDAQ 100. Sorry, I'm going back and forth, but I kind of want to give you visuals. Facebook, Apple, Amazon, all of the FANG stocks declines. FANG stocks are not looking good. Everybody's looking forward to corporate earnings, which are coming out better than expected, and Friday's job data and the jobless claims on Thursday. Most investors are worried about renewed COVID outbreaks, especially, and inflation upticking. I don't think Americans are that worried about COVID right now. I think the rest of the world is. But we are worried about inflation. Now, here's where it gets really, really interesting. Selling on Wall Street accelerated after Yellen said interest rates may have to rise to keep the economy from overheating. Did you guys hear that? Now, rising interest rates means lower bond. Remember when I said towards the end of the year, interest rates are probably going to go higher? Well, what does she say? Yellen said again, you can't take this back. May rise to keep the economy from overheating. Now, earlier, Federal Chairman Jerome, Mr. Everything is Peachy Powell, and let me predict everything 2 years ahead of time, said the economy is clearly brightened in the U.S., but the recovery is uneven. He's absolutely right about that. It is uneven. We have a lot of sectors that are doing great, some sectors that are doing really bad. It's going to take some time. It's going to be a bumpy road. Economists expect U.S. data due Friday to show hiring of 975 workers last month as the economy accelerated out of the pandemic and the vaccine rolled out nationwide. Unemployment rate is expected to drop to about 5.8% from about 6%. I think it's going to come out to about 5.9%. I'm not too concerned with that because I like where the jobless claims are going. And that's actually a report that's coming out tomorrow. And the 4-week moving average is at 611,000. We've been breaking 600,000 2 or 3 weeks in a row. If we can break 600,000 tomorrow, I'll be very, 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 very happy. The range is between 522 and 575. Honestly, even if we hit 575, I'll be happy. I'm happy no matter what, as long as the number is below 600,000. Toes, fingers, everything is crossed. But again, if as long as that number's good, it's going to give us a good upside. Keep your eye on the bond market. I think the bond market is going to start losing ground as interest rate sentiment towards higher rates is going to increase. Remember, higher rates, lower bonds. Higher bonds, lower interest rates. They're inverse of each other. I don't think bonds are going to go higher too much more. I think they're going to kind of drift around here for another month or two and then come back down. Now, I've got some really, really good pullbacks for you right now. Low risk opportunities in biotech, medical stocks, and in chip stocks. So let's talk about medical stocks. So this is InMode MD. If you look at the profile of the stock, you will see they do medical technology. Interesting sector, medical technology. It's an Israeli company. They gave us 245% last year, and they make plastic. They company serves plastic surgery, gynecology, dermatology, but they make technology for medicine, which is a growing field. And this InMode is looking great, and it's pulling back towards the 50-day line from making multi-year or all-time highs. I like pullbacks from all-time highs. They tend to move back up. And I like the fact that we're near the 50-day moving average. There's a good low-risk entry opportunity here. Next one is ACHC Health. Not pulling back, but look at this trend. This is a beautiful trend. I call this the Jack Carter trends. He likes trends that move this way. And if you look at the profile of the stock, what did they do? Outpatient facilities. Folks, outpatient facilities are getting bigger and bigger and more packed because there's more older people around. Behavioral health services, psychiatric, chemical dependency services, man, especially getting out of this COVID. Can you imagine how many people got hooked on drugs? How many people gained weight? There's going to be a huge need for outpatient services. Huge. Hospitals, outpatient facilities, especially with the stress, the financial stress, the COVID stress. There's just a lot of stress for people right now getting out of this COVID. Divorce rate is like at an all-time high. People can't stand being locked in together. Anyway, don't get me started. The bottom line is the stock is up 188%. And if you look at it, I love how it's moving right now. I just love this trend. This trend just looks really great. So that's what I have for you in the healthcare sector. For the chips, now this is a very interesting company. Cuervo makes chips. It makes semiconductors for the iPad. And they are now updating all their iPads with 5G technologies. I liked how it's below the 50-day line, but closing at the 50-day line, which gives us a very low-risk entry. I would be buying at these levels and waiting for it to hit above the 205 level to get out. And if it breaks this low, you just get out. But make sure you enter when it's trading above the 50-day moving average. Very low-risk trade, very cool stock, and giving us an opportunity for a pullback to the upside. And again, this is a short-term trader's market. Markets are too overbought for long-term position trades, but they're perfect for short-term trades like these, where your risk is little from here to here and your profit is 2 times the difference between your entry and your exit. Last but not least, J-Bill Circuitry also heading towards the 50-day moving average from making multi-year swing highs. If you look at what the company does, it's electric manufacturing, printed circuit boards. Semiconductors, folks, 98% last year. Very, very strong company focused on the supply chain. It's a Russell 1000 stock. The stock made a multi-month high or a multi-year high, maybe all-time high. Yeah, all-time highs and pulling back. So we've got INMD, we got ACHC, we got Cuervo, I love this stock right here, and JBL. I like all of them. I just happen to like fundamentally what this stock does, because any company that supplies chips for the Apple iPad is going to be a pretty good company, and that's what this company does. So we got INMD, we got ACHC, we got QRVO, and JBL. Pretty good, right? 4 pullbacks in 2 different industries. Not bad, right? Now, folks, I've got something important for you, something timely, something you really need to pay attention to. In the world of trading, most only like to talk about the good times, the easy times, when traders and investors get in a stock after a massive sell-off, and just about everything is a bargain. Those are good opportunities, right? Well, that's why we trade pullbacks. But things have changed over the last 12 months, right? Everything's making multi-year high. The stock market has been breaking to new highs over and over and over. The S&P is at new highs, like off a tick off of new highs. And when this happens, trading tends to turn tough because you don't want to buy overbought stocks, right? That's why I'm revealing the three profit rules that I use to navigate the markets in uncertain times like these. And you've got to get in on it. Are you ready to learn how to use this strategy? I sure hope so. Click on the link below to get more information about the next breakout stock. Do it now. Do it right now. Opportunities are ripe for this. We've had huge winners. We've had a really good win rate. You've got to check this out. And as always, make sure to like this video. Subscribe to this channel if you're watching it on YouTube. Folks, you've got to stay ahead of the market by being the first to be notified when we post these videos. Follow the link and send me some feedback. And I'll talk to you guys soon. Have a great day and check out these 4 pullbacks in 2 different industries. And I'll talk to you guys soon. Bye.